Well, I think Bitcoin's going to get to 250,000 within a few months. And if Ethereum price ratio to Bitcoin gets back to its 8-year average, that's $12,000 for Ethereum. I mean, that's a huge move. If it gets to the 2021 highs, that's $22,000 for Ethereum. But I think Ethereum is going to become the future of finance, the payment rails of the future. And if it gets to 0.25 relative to Bitcoin, that's 62,000. So I think Ethereum at 3,000, of course, is grossly undervalued.
2025 is shaping up to be the year Bitcoin steps out of speculation and into the core of global finance, powered by a tokenization wave no institution can ignore. Tom Lee, a prominent Wall Street strategist and co-founder of Fundstrat, outlines a powerful shift unfolding in 2025 as tokenization becomes the central force reshaping global finance. His review of the past decade highlights Bitcoin's extraordinary 112x performance compared to traditional assets, reinforcing its role as a superior long-term investment. Yet despite strong fundamentals in 2025, including a pro-crypto U.S. policy pivot, strategic Bitcoin reserves at the state level, and BlackRock's Bitcoin ETF emerging as a top revenue generator, price action has remained muted. The year also marked major institutional acceptance, with JPMorgan launching its token on Ethereum and tokenization rising to top priority status across the financial sector. Lee's observations point to a vast adoption runway ahead. Only 4.4 million Bitcoin wallets hold more than $10,000, while nearly 900 million people globally maintain retirement accounts above that threshold. The gap underscores how early the market still is, even as Wall Street prepares to tokenize nearly $1 quadrillion in financial products. The introduction of MiCA regulations in Europe strengthens this trajectory by formalizing frameworks for asset reference tokens, e-money tokens, and broader crypto assets. Against this backdrop, Lee's projections, Bitcoin moving toward $250,000 and Ethereum reclaiming higher ratios, frame a market entering its most consequential phase yet. Stay informed on the future of Bitcoin and Ethereum, join the conversation, share your insights, and don't forget to comment, share, and subscribe for the latest crypto analysis.
So 2025 is all about tokenization, but let me level set for a bit, and let's look back at the last 10 years. In December 2016, you could have said, I want to own the S&P, and you would have tripled your money, which is pretty good. You could have bought gold, because you might have been a gold bug, and you quadrupled your money, or quadrupled your money. Or you might have been really smart and bought NVIDIA and made 65 times your money. But if you bought Bitcoin 10 years ago, which is right around the time we started recommending it to Fundstrat clients, you had 112x. But outperforming Bitcoin was Ethereum, which was a 49 times return. I'm sorry, 500 times, almost a 500 times return of your money. So that was the last 10 years. Now we're in 2025, and when I look back at what happened this year, we've had a lot of major positive fundamental events, but the price action's been terrible. So here are some high-level bullets of what I think have been the high points. The first is the US government became very pro-crypto and setting the standard for the Western world. The second is several US states and the US government plan or have executed a strategic Bitcoin reserve. Huge deal. The third is that BlackRock's Bitcoin ETF is now their top 5 highest fee-generating product for BlackRock. I mean, think about that. They launched that only a year and a half ago, and it is one of their most profitable ever ETF products. Now, JPMorgan, which, as you know, has been a hater of crypto for many years, is launching a JPMorgan coin on Ethereum, but they're not the only ones, there's others. Tokenization has become a big buzzword and priority for all these major financial institutions. And then these last two things are probably more important than you realize. There have been probably three breakout products that are crypto native that have changed how traditional financial markets make decisions. One example is Polymarket, which really used prediction markets to actually generate so much information that, I mean, at Fundstrat, I think it's the closest thing to a crystal ball. And then Tether has proven to be the top 10 most profitable bank in the world. I mean, think about that. It's a crypto-native, singular line, monoline business, and it's one of the top 10 most profitable banks in the world. Okay, but I think the real story in 2025 is tokenization. It all started with stablecoins, and that was Ethereum's ChatGPT moment, because all of a sudden, Wall Street realized that if you just tokenize the dollar, you could make a lot of money. But now, financial institutions are saying tokenization is going to transform finance. In fact, Larry Fink says it's the biggest, most exciting invention since double entry bookkeeping. I mean, first of all, I don't know if that's that exciting, but it is apparently a huge deal. And I mean, this picture is, this is monumental too. Brian Armstrong and Larry Fink together talking on DealBook. Okay. So if you're bearish on crypto or you think the best days are behind us because of the last 10 years, I'm going to disagree. Keep in mind today, there's only 4.4 million Bitcoin wallets that have more than $10,000. Okay. By contrast, there's almost 900 million individuals around the world with more than $10,000 in their retirement accounts. So if Bitcoin were to be held by all these accounts, that's a 200 times increase in adoption. That's still, to me, exponential and hypergrowth. And Bank of America Fund Manager Survey still shows 67% of fund managers have zero allocation to Bitcoin. Wall Street wants to tokenize all financial products. And keep in mind, financial products today, if you include real estate, you know, it's almost $1 quadrillion that they want to put onto the blockchain. And then, of course, in the agentic world, it's going to create a need for decentralized trust and security, of course, which is what blockchain solves. So to me, I think the best years are still ahead.
Ethereum's breakout and the evolving landscape of crypto treasuries signal a pivotal moment for digital assets, with Bitcoin and Ethereum poised to redefine Wall Street's approach to finance. Tom Lee reveals that Ethereum is entering a pivotal breakout phase after spending nearly 5 years in a tight range, a shift that now carries major implications for both Ethereum and Bitcoin. His analysis points to Bitmain's strategic pivot into an Ethereum treasury model as a move aligned with this anticipated breakout, reinforcing Ethereum's increasing relevance in a tokenization-driven financial landscape. He highlights the approaching breakout in the Ethereum-Bitcoin ratio as an equally important signal, noting that rising utility demand in a tokenized world strengthens Ethereum's position relative to Bitcoin. These structural changes align with his price projections that place Bitcoin near $250,000, while Ethereum could advance toward $12,000, $22,000, or even $62,000 depending on how far the ratio expands. Tom Lee reveals that the emergence of Ethereum treasury companies marks a deeper transformation within Wall Street. With Ethereum's proof-of-stake model generating yield and providing network security, treasury firms are evolving into bridges between traditional finance and decentralized systems. Stock liquidity becomes the defining metric of their relevance, demonstrated by MicroStrategy and Bitmain commanding 92% of all crypto treasury trading volume. As this shift unfolds, Ethereum's recent surge to $3,200, driven by the Fusaka upgrade and strong accumulation by Shark wallets, adds momentum, strengthening the broader outlook for both leading digital assets. Let's get back to the interview.
As you know, Ethereum has been range-bound for 5 years, as I've shaded here, but it's begun to break out, and that's one of the reasons why myself and Mosaics, Shen from Mosaics is here, we got very involved with Ethereum by turning Bitmain into an Ethereum treasury company because we saw this breakout coming. And maybe more importantly, the Ethereum-Bitcoin ratio we think is also going to have a breakout. Now, this might actually be more important because Bitcoin and Ethereum are really the two most important crypto L1s or blockchains out there. But if 2025 is about tokenization, that means Ethereum's utility value should be rising. Therefore, you should watch this ratio. Okay. Well, what does that mean for Ethereum's price? Well, I think Bitcoin's going to get to 250,000 within a few months. And if Ethereum price ratio to Bitcoin gets back to its 8-year average, that's $12,000 for Ethereum. I mean, that's a huge move. If it gets to the 2021 highs, that's $22,000 for Ethereum. But I think Ethereum is going to become the future of finance, the payment rails of the future. And if it gets to 0.25 relative to Bitcoin, that's 62,000. So I think Ethereum at 3,000, of course, is grossly undervalued. You can buy Ethereum because we're bullish on Ethereum. But I think you should also realize that digital asset treasuries are playing a role in transforming Wall Street. Okay, I'm going to start with Ethereum specifically. But in our view, a proper Ethereum treasury company is actually a crypto infrastructure business, and I'll explain it. First of all, Ethereum is a proof-of-stake blockchain, so Ethereum treasuries are staking Ethereum, so we're providing security. Now, in return, we get a yield, and that's revenue for the treasury companies. And we are essentially improving the security of the network, but also acting as a bridge between traditional finance and the DeFi world. And finally, stablecoin issuers are going to, in our view, ultimately want to stake Ethereum because it is the underlying base monetary layer. But for all of this to work, I think the most important element of a crypto treasury is it needs to have stock liquidity. Stock liquidity is a measure of how Wall Street views that company as relevant to the future of finance. So let's look at the two biggest treasuries. MicroStrategy today is the 17th most traded stock in the stock market today. So think about that. Like, let's say that you guys think no one cares about MicroStrategy. Wall Street certainly does. It is trading almost $4 billion a day, and it trades, it trades more trading volume than JPMorgan, for instance. Now, BitMine, which essentially was created 4 months ago, is the 39th most traded stock in America today. And as I zoom in here, you can see it trades more trading volume than General Electric, which has 30 times the market cap, and it trades almost the same trading volume as Salesforce.com, which is 20 times the market cap. So these two companies, according to the equity world, are extremely relevant. In fact, BitMine and MicroStrategy account for 92% of all crypto treasury trading volume. There's 80 crypto treasuries, and these two companies are 92% of the trading volume. And we can see that here. MicroStrategy is 3.6 billion a day. BitMine's 1.5 billion a day. After that, there's almost no trading volume. It drops off by 90%. Okay, and that's where MicroStrategy and BitMine are pursuing different strategies, because MicroStrategy is purpose-building their crypto treasury to be what Michael Saylor calls a digital credit vehicle. And he's financialized his balance sheet with a series of products, and it's been phenomenally successful.
The trajectory of Bitcoin and Ethereum in 2025 reflects a market entering a transformative phase driven by tokenization and institutional adoption. Bitcoin's strong historical performance, coupled with strategic reserves and growing ETF demand, underscores its continued relevance as a store of value. Ethereum's breakout from a multi-year range, supported by treasury models and proof-of-stake yields, positions it as a core infrastructure layer in a tokenized financial system. The Ethereum-Bitcoin ratio serves as a critical indicator of shifting utility demand, highlighting the interplay between the two leading digital assets. Large-scale trading volumes of crypto treasuries, along with regulatory clarity through frameworks like MiCA, suggest that traditional financial markets are increasingly integrating digital assets. Recent network upgrades and concentrated accumulation by major investors further reinforce momentum, pointing to significant upside potential across both Bitcoin and Ethereum in the context of expanding adoption and evolving market infrastructure. Which do you think will lead the next phase of crypto adoption in 2025? Bitcoin as a store of value or Ethereum as the foundation of tokenized finance? Stay ahead of the crypto revolution. Share your thoughts, join the conversation, and don't forget to comment, share, and subscribe for the latest insights on Bitcoin and Ethereum.